Oil is headed for its third weekly drop, its longest losing run this year, on concerns that a recession could cut into energy demand. Oil prices are edging up this morning after falling 3% on Thursday as the OPEC Plus group of producers, including Russia, agreed to stick to its output strategy. However, the Producers Club avoided discussing policy from September onwards. Brent crude is now trading at $109 a barrel and WTI at $105 a barrel. Crude fell around 8% in June as investors fretted over a potential global economic slowdown. That eroded a rally spurred by the conflict in Ukraine, interruptions to supplies and rising demand. Since the start of the year, oil is still up 45%. For more on this now, let's bring in Craig Erlam, who is OANDA Senior Market Analyst in London. Welcome back to our show. Craig, I guess that my first question would be, we've seen oil prices fall in June overall on recession concerns, but we've said it for the year, they are up 50%. What is going to weigh the most on this prices moving on? Is it recession fears and sentiment?
Unfortunately, that's the biggest downside risk for these oil prices. I don't think we should get too carried away ultimately at this point with the price of a barrel of oil. I don't think we should hope that the price of fuel at the pump is going to get much cheaper without meaning to be the bearer of bad news. Recession is the biggest downside risk here, and that we don't ultimately want to see that, but it is something that's being increasingly priced in by the markets. The economic data is starting to justify at least a slowdown. And it does seem that we are heading in that direction, with central banks having no choice but to continue to raise interest rates aggressively. The other flip side to that is we are still seeing a very tight market, and there isn't much capacity for the major producers to ramp up production anytime soon in order to alleviate those pressures, which again brings me back to the initial point. That's why recession is the big downside risk here. Recession means lower demand, and lower demand rebalances the market, which brings oil prices back to more sustainable levels. As we move into the end of the year, we'll see how things start to progress and where more production could potentially come from. But at this point in time, it's just not looking that promising.
Right, Craig, and you say at this point a recession is the biggest potential downturn. So will policymakers really shift their attention from inflation to recession then? And if so, when will they do it?
Unfortunately, they won't. And the reason is because they don't want to make a short-term issue a potential decade-long issue. Getting to grips with inflation is the first priority. It's the ultimate priority. If we can get inflation back towards a more sustainable level by, say, the end of next year, and we can see it at around 2%, which is hopeful but still possible, then that means that we can start to see more sustainable growth in the longer term. If policymakers start trying to prioritize growth and avoiding a recession, and we see inflation at 5% plus, then inflation becomes more ingrained in expectations, it becomes more ingrained in people's mindsets, and then it becomes a much longer term issue. Let's not be in any doubt. Higher interest rates are not ideal. It's not something that many people want to see when you're borrowing, when you're getting new mortgages. But what we should want to see less is unsustainable food prices, energy prices rising regularly, and therefore creating this inflation spiral. That is far worse for households, and it's far worse for the economy. And it's why central banks have to get to grips with it very soon.
Right. And President Joe Biden, July's trip to the Middle East is also poised to be a very significant moment for oil prices. What do you think will happen in the sense that do you think that Saudi Arabia and the UAE will be able to agree to a boost in production?
So for so long now, the UAE and Saudi Arabia have been two of the very few countries that have been reported to have large capacity. In other words, they could ramp up production quite aggressively in order to alleviate some of these pressures. They've been heavily criticised by various agencies like the IEA, like the White House, for example, as well. And people have wondered why they haven't been ramping up production in order to try and alleviate these pressures. Perhaps there's a political angle with Russia being part of the OPEC Plus alliance, wanting to remain firm alongside its allies within the alliance. But interestingly, reports earlier this week suggest that may not be the case. That Emmanuel Macron holding a conversation with the UAE and then passing this information back on to Joe Biden reported earlier this week that they simply don't have the capacity. They're running at near capacity. That's a big concern because these were two of the hopeful areas where we could have alleviated some of those supply side pressures. And again, brings me back to my earlier point. There just isn't the amount of spare capacity, the amount of spare supply around the world at this point in time to alleviate those pressures. Perhaps we'll see a token effort where maybe we'll see both of these countries commit to longer term production increases. But in the near term, over the next 6, 12, 18 months, that doesn't necessarily mean we're going to see a big difference at the pump.
Craig Erlam, thank you for this analysis.
Thank you.